My name's Ian Kocher. I work at Crosstimbers Capital Group, which essentially we're a private equity firm based here in Houston that's investing growth capital into early stage infrastructure businesses. We're building platforms that an infrastructure fund wants to buy.
Turn.
Oh,
yours did what mine did. Should I say 4? Get down. Yeah, you're good.
All venture capital firms want to focus on software, asset-light businesses. None of them want to go build cell towers.
Oh, did you see it come down?
No, I didn't see it come down, but you
hit that limb.
It's super fun. It's high pace. I get to look at a lot of stuff. I'm looking at about 200 deals a year.
It was like a really solid handshake.
That was perfect. After two great drives.
Yeah.
Just you could probably see the electricity through the camera.
Yeah.
This was fun.
You want to introduce yourself to everyone?
Let's do it, yeah. And we're starting off on a good note here. Reese just had a 50-yard chip in, so
I did.
Yeah, yeah, everything. We're starting off good. My name's Ian Kocher. I work at Crosstimbers Capital Group, which essentially we're a private equity firm based here in Houston that's investing growth capital into early stage infrastructure businesses. So that takes on, asset classes like telecom, digital infrastructure, transportation and logistics, power, water, kind of your core infrastructure asset classes. So been there for 7 years. I've got 2 kids, an amazing wife, lived in Houston ever since, started my career in oil and gas, and ultimately came straight to the big leagues after Texas A&M. So.
How big is y'all's fund? And which fund are y'all on?
Yeah, so we're raising Fund 3 right now, which is a little misleading because we were a family office for a decade before we kind of branched out and became Crosstimbers, where we raised traditional private equity funds. But we're raising Fund 3 right now. We got 350 on the cover. We're a family office. Fund 1 was 100. Fund 2 was 225.
That's great.
So we're kind of at the tail end of deploying Fund 2 and teeing things up for Fund 3. So our strategy's hard to deploy a lot of capital. I don't think we could ever raise huge funds. We're kind of in this sweet spot of providing 40 to 80 million dollar growth equity checks. Just because we're not a buyout firm, right? So it's hard to deploy a lot of capital at once. We're really kind of, dripping our capital into these businesses as they acquire or develop some sort of asset base.
Got it. So what does the engagement look like? Are you committing a dollar amount and then providing it whenever they need it?
That's exactly right. So we're committing a dollar amount. Typically, we're majority governance of these companies, and as the company needs it, either through some of our platforms are development companies where they're developing, say, cell towers. And each cell tower that they develop, we ultimately fund the CapEx as they go. It is typically how we structure it. So, I mean, we could be drawing down into a commitment for 5 to 7 years.
Oh, wow. Yeah.
But ultimately,
that feels unique.
It is, yeah. And, ultimately, the way we're trying to think about it, or the very easy thing to say what we do, is we're building platforms that an infrastructure fund wants to buy. So we've seen, this big disparity in capital coming in from big infrastructure funds, and a shortage of platforms to buy because there's no venture capital. All venture capital firms want to focus on software, asset-light businesses. None of them want to go build cell towers.
Yeah.
And, so we found ourselves in this unique spot in the market where there's not many people buying. Yeah.
So you're saying y'all are putting together deals kind of like venture style, lower middle market or lower market. I don't know how you'd really define that, to find exits. Up market.
I would almost categorize it as venture staged, right? So we're backing entrepreneurs. Sometimes we do back and builds. So almost
I see,
we all come from E&P, oil and gas investing, where you back a management team to go buy and develop acreage.
Right.
We're doing the same thing. It's just instead of oil and gas, it's infrastructure. And so it's venture staged, but we're structured, our investment isn't structured like venture. We're not doing Series A, Series B, that kind of stuff. It's more traditional private equity structuring. So we're kind of we're this hybrid mix between private equity, venture, and infrastructure.
Yeah.
It's where the Venn diagram of all three of them meet.
It's smart, I think, to your point.
there's a lot of founders at that level, but not a lot of capital participating at that stage.
That's
yet.
exactly right. But a ton of capital participating from our buyers, from our buyer pool.
100%.
And just a shortage of really good platforms to buy.
Check sizes are, y'all have parameters around that, or can y'all get flexible at market?
We do, because the way that I described like how our commitment comes in, we can't always be right on the front end.
Right.
I'd say our sweet spot is like anywhere from 40 to 80. We'll go as low as 20 with the expectation that like once the company really gets going, that we're going to be funding more. Like we want to attach to really capital intensive opportunities that when we stay with it longer, we're deploying a lot more capital into the same business. So I would say we'd rather do half the deals, but those companies like continue and us stay with them in their growth story, which has happened a lot of times. Like we've raised a few continuation vehicles where they, you know, outstripped our initial commitment, and then we ended up doing, instead of selling the business, you know, we really thought we could stay with it for the next leg and really like the team, the strategy, have then raised 2 continuation vehicles that were larger than the fund that they came out of.
Oh, wow.
If that makes sense. Yeah.
That's crazy.
We love that. Like that's exactly what we're looking for.
Yeah. Probably just roll into it since it came off that other topic. But
Sure.
Like an example of what you were talking about of deploying over a long period of time to something that's capital intensive.
Yeah, so I think Box Wheel Trailer Leasing is one of our portfolio companies. That's probably the best example to use for that full cycle. You know, we were there from the beginning as a back and build. You know, we took it to a certain scale point where we could have sold it to an infrastructure fund, but we felt like, you know, we had a few more innings left in the investment, and it was right in front of us to keep going. And so we ended up raising a continuation vehicle for that one, and have still kind of pushed and continued to deploy, you know, 5 times the amount of capital that we originally did into that business. So we met the founders, these 2 guys named Mike, who had been working, they were kind of the rainmakers for one of the big public companies, had never done it for themselves, wanted to. They knew everything there was to know about the trailer leasing business, which is like 53-foot dry vans, right? It's what the 18-wheelers that you see going down the road.
Yep.
It's a lot of those are not owned by the companies that travel them. They're leased or rented.
Makes sense.
From equipment owners like us. And so they've been doing it for the big companies for a long time. And it was like, hey, we want to do it ourselves, but we don't know how to build a business.
Right.
And we're like, hey, we don't know anything about trailers, but we know how to build a business. And so we provided a $15 million equity commitment at the time out of our first fund. This was in 2018. And ultimately that's over 100 now.
That's originally to buy equipment, probably.
It was to buy equipment, to build out the team, and to really put the infrastructure or the platform in place to scale really quickly.
Yep.
So it started with, we had 1 branch in the city of Denver that we ultimately got to about 1,500 trailers in. Then we went to Phoenix. It is a lot. So we own about 10,000 today in about 10 branches across the continental U.S., mostly on the western side. So it got big fast. We did 3 acquisitions of other companies within that, so we were bolting on kind of new geographies through new branches. And so the uses of our capital was really build the team, build the platform, acquire trailers, get them on lease, and then it was acquire businesses once we got to a certain scale point.
Right.
And now we're in a really good spot with that big business, and it's probably at the size where, you know, an infrastructure fund's going to buy it.
Yep. No, that makes sense. It's a great example.
How are you sourcing deals? What's your kind of cadence look like?
Yeah, so as you can imagine, there's no investment bankers that are selling the opportunities that I described, right? So our originations or deal sourcing doesn't come from buying companies that an investment bank is kind of charting out like a typical private equity fund. So really all deals come through our network. So friends of the firm, management teams, service providers, other private equity firms who maybe they're like, hey, it's too early for us. Why don't you guys invest, go build it, and we'll buy it from you in, 5 years.
100%,
So we have really good deal flow from
kind
of all those different areas. And, it typically comes in the form of, like, we have a long process of getting to know the management team and really building trust in that arena.
In terms of, like, when you're engaging with someone who's looking for a partner, what's the talk track there?
When we find an entrepreneur who's been trying to raise capital in the specific asset classes or subsectors that we look for, they've really struggled because they're like, man, I went and talked to these big infrastructure funds, and they're like, come talk to me in a decade when you're at a certain size.
Right.
And I went and talked to venture capital funds, and they were like, ooh, you're an asset intensive, capital intensive business. Like, no thanks. I like asset light software type businesses.
Right.
And so when we find each other, it's almost like, gosh, I've been waiting for you, kind of thing. Like, I figured somebody had to do this.
Yeah.
So typically there's receptivity, and there's not much competition for us whenever we meet the right deal.
Yeah.
And then for us, if it's the right deal, like the unit economics of whatever, piece of infrastructure, say it's a cell tower, say it's a trailer, whatever that is, has to be really high at the asset level, because then we're, scaling a G&A platform around it. And so like the scaling math has to make sense, where it makes sense for us to take early stage company risk because our downside is protected through the asset value.
Yeah, that makes total sense.
Yeah. So typically, and then it's a long dating process. Like we're typically not on a process that you would normally think of. I mean, it's from when we meet an entrepreneur to when we make an investment, like it could be 6 months. Yeah. It could be as short as 3 or 4. It could be as long as 9. But
yeah. In my head, I was thinking you were going to say like 2 years, maybe.
Well,
potentially.
That has happened. Yeah. So, but we love it, man. I mean, I
think y'all are in an awesome spot.
It's a cool thesis, really developed by our founding partners when they were at the family office. And then they caught the bumper with a few companies that ended up going public, and they just needed a ton of capital to kind of run through the tape with those companies. And that's what kind of caused them to branch out from the family office and raise dedicated
strategy
vehicles
around that. Yeah. So what was your path into private equity world?
Yeah, I had a better lucky than good kind of scenario story. So I started in college. I was at A&M. I was in the finance program, and I thought I really wanted to do real estate development. Ultimately did an internship in that my junior year, and figured like nothing against it. It was just, hey, maybe this isn't what I want to do.
Right.
And so just started looking for jobs, stumbled upon something that I thought would have been good, but I didn't realize how good it was. And I ended up starting my career in the M&A group at Halliburton, large oilfield services company. And what I didn't know before I got into it, but what ultimately ended up happening was it was essentially a buy-side investment banking experience where we were just buying companies all over the world. And so I was traveling to the Middle East, North Sea, Norway, and it was awesome. And it was all buy-side. So we weren't doing, obviously, being at a company, we weren't doing any sell-side mandates or anything. So we were just straight buying companies, which teed up perfectly for private equity. Yeah. And ultimately thought about going more in like the operational finance route, like path to CFO. Talked with a mentor who was in private equity that kind of brought me in. I knew I wanted to get out of oil and gas. Right. Not because I love oil and gas. I think it's the most dynamic industry in the world. Yep. Got to see every piece of it at Halliburton, which was really neat. But ultimately, like once you're an investor, I didn't want to be so driven by timing and commodity cycles. I met the Crosstimbers guys, which a bunch of great people, a bunch of Aggies, just had a really neat kind of outlook on the investment world and care about family, care about people. So I landed there 7 years ago. I started more, in the traditional deal team, I would say, like covering portfolio companies, underwriting new deals, and have recently switched to almost exclusively on the new deal side. So sourcing, I take the first phone call kind of all the way through transaction execution, and then hand it off to an asset management team who ultimately manages the investment for the remainder of its life, which is fun because
super fun.
It's super fun. It's high pace. I get to look at a lot of stuff. I'm looking at about 200 deals a year. We do too. And so kiss a lot of frogs, but meet a lot of cool people doing a lot of cool things, and ultimately kind of get to tee up our team for success with the right investment thesis and all that good stuff, which I love it.
Final question.
Yeah.
If you were thinking about kind of the last 7 years in private equity, what would be a good skill that you've developed that would have been good to know heading into it?
Yeah. Well, so this might be a strange answer to this question. People don't usually think about this skill in private equity, but I would think teaching, because especially in my role.
Interesting. Yeah.
Because my job is to assimilate tens of hours of conversation, tons of data, the asset class, the industry, the management team, the financial profile, the underwriting, and ultimately assimilate that into something that's really easy to understand for the rest of our team.
Yeah,
and
explain
the
it
investment
internally.
committee. And explain it internally. And create buy-in among the future asset managers, the investment committee, to help make a final investment decision.
Yeah, interesting.
And
so like storytelling kind of.
Really
in a way.
storytelling.
Yeah.
Really storytelling, and being able to take like a lot of complex ideas and distill them down into the fundamental drivers that really matter. So I'd say that's a skill I didn't expect to need.
Yeah.
I thought it just like being really good at math,
Yeah.
or
find a deal, good at math,
Yeah.
and like go
and like
spend money.
and woo and like win people over or whatever. And really, it's I feel like most of my job is teaching really complex situations and making them easy to understand, so that people can really get down to what matter quickly.
Yeah, I love that, dude.
Yeah, this was fun. Thank you.
Thanks for coming on.